Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy. With today's pre-market forecast for Wednesday, October the 7th, we're going to do our midweek review of the week. As usual, we start with our news items for this day. Today being Wednesday, October the 7th, of course, we have FOMC meeting minutes at 2 p.m. We're pretty light after that. Tomorrow we have at 8:30 is unemployment claims, and we're free on Friday. So keep your eyes open for FOMC. Let's see what type of reaction this market can have, either a little before or just after, but it may impact most of the morning. So be very careful and be aware of this particular report. Our analysis, let's start with our daily chart, our 30,000 foot view. As we noticed, bounced off the 80, found resistance on the 20 SMA, broke above it. Now currently using the 20 SMA as support. That's what we were expecting for the market to do. If we couldn't break below the 50% retracement of this original run, we were anticipating the market to hold at the 80 as it did here, a much deeper retracement that we had anticipated, more of a rejection than anything else. Of course, remember this all began on Labor Day. Market bounces again above the 80. We're expecting 20 SMA to hold, and we're expecting a little bit of movement. Volume has been fantastic at 1.4 million as an average, and our ATR, our average true range, is at a healthy 70. So we do have the two V brothers, volatility and volume, which is participants, and movement, which is what we need in order to participate in this market. Let's quickly jump to our next time frame. Another time frame closer to our trade chart. This is an 8,000 tick chart. As you can see, market blast through a lot of our originally marked resistance areas. Here in particular, you see the market blast through this resistance area. Find the top, retrace back to what used to be resistance as support, uses that as a platform, continues higher. Big fix here, big pullback here. Pre-market a couple of days back, market finds support near this area, starts its trek up, expecting resistance in this particular level here. Market clearly breaks through it, holds support, continues higher, and boom. Yesterday, the big news, Trump was not enforcing or not asking the Senate to concentrate on the stimulus, at least not the stimulus that was passed by the House, but to concentrate on the judge. That, of course, that tweet obviously moved the market lower. Market found a bottom, a familiar bottom, and is recovering quickly as he promotes his own version of the next stimulus package. A lot of volume this pre-market, as you can see the difference here in the volume of the pre-market from yesterday and the pre-market of today. As you can see, we have a little bit more activity, so we can expect a little bit more movement today. Let's get closer to our tradings chart today so you can start seeing how we're drawing the picture. Which way should the market be heading today, and what is it that we're looking for? So as far as we're concerned, the pink represents the intraday low of yesterday. See how the market broke clearly below it, found support, then it uses this as first as resistance, then again as support, launches a run to the upside, finds a ceiling, retraces from the area, and now is coming back to retest that previous pivot. This is our north-south line. As long as the market, at least in the short term, remains above this trend line here, we're expecting more continuation to the upside. Any break below this number here, this area here, we're expecting continuation to the downside. Okay, so remember, these are all short-term anticipations. These are all short-term projections. These are all-day projections. The market can break this line, get all the way down to here, and still be considered a retracement. And obviously, if it gets that close, the movement potentially can come down and retest this area here. But there's our north-south line. This is our trend line. This is the price level mark based on price objective. It's not based on anything else to do with anything subjective. This is all based on price action and our study of price action. And as you can see, the market can hold above this line here. That will be our north-south line. Any pullbacks to this line, we're expecting to go long. Any breaks above this resistance area, continuation of the longs. Anything below here, we're expecting a little bit of continuation to the downside. So keep your eyes open on this area today. It's going to play a very key and pivotal role in our market today. And thank you for your support. I was out a couple of days there, a couple of weeks for a little bit of R&R, but I'm back on the saddle, and let's make some really good decisions today. Take care.